Going to be looking at some distinct price action which occurred yesterday in the Bunds off the back of a comment that was made by President Trump relating to China. Now, it's been pretty quiet today, so I always think it's worthwhile when you see price action that you don't necessarily understand, that's very kind of obvious and visible or distinct on the ladder, to go back and try to kind of see if there was any way to have taken advantage of this opportunity. Now, this kind of comes off the back of, equities have been offering over. Trump has had a potential discussion of impeachment has been rising up, and he's kind of been on the back foot a bit. And we've seen this quite a lot where as equities have rolled over and kind of look relatively weak, he's thrown in some bullish tweets or whatever, essentially trying to prop up the market or push the market up. We see it over and over again, and it's trying to distinguish the ones which are going to go and the ones which aren't, and where you believe that comment is moving the market unjustifiably, when deciding when is the right time to fade that move and when's the right time to potentially go with it. And this is going to be an example of where there's a distinct overreaction and you could get really caught out trying to fade the move and really just trying to pick apart some kind of clues in the price ladder as to show that this is a move that isn't one to be faded. This is very aggressive, and how to potentially execute off the back of that. So I'm going to try and get to the ladders as quick as possible. Firstly, just want to take a look at the structure in the Bunds at the time. So this left-hand box is the Bund daily. So you can see after kind of double topping and then offering over after the ECB, we've kind of pulled back. And at the time when this comment came out, we were trading in this candle about here. So we'd had a big green candle the day before, as you can see on the right-hand side on the profile. Double distribution day, and we'd largely occupied the top kind of half of the day's range. Very sideways, not much going on, going into about 4 p.m. So really what we usually expect on days like this is where it's so balanced and relatively quiet, you don't really expect the Bund to be able to break out of these really tight balanced ranges so late in the day, unless there's a real kind of big reason to, big fundamental shift, big comment or something like that. But what we saw is the market started to offer down off the back of this comment, and then just kind of built up a bit of momentum before it just started absolutely emptying out and dumping down. And this ended up being pretty much a 50-tick move. So really one that you just can't ignore. You can't just be like, oh, it was an overreaction, let's move on, be lucky that I didn't get too caught up in it, because really it offered a really good opportunity if you were astute to the fact that the market potentially just wanted to roll over, and this was just a good kind of a good initiator to that move. Here we have the SPU. Now, the reason I'm going to look at the SPU, and I'm going to talk about it largely in relation to what we see on the ladders as well, is when we're looking at US-China trade comments, the markets that we see most responsive, we've seen our elite trader executing off the back of these, is in first SPU, second gold, third Bunds. And really the kind of common pattern that we've seen is for the good comments, SPU and gold move quite a bit. And where the Bund might initially kind of blip with the moves, it doesn't really show too much follow through. So this was a real anomaly on the back of the fact that the SPU kind of did this sort of move, but it was only 10 handles or so, and the relative kind of move or in the Bund was particularly high. But we can see coming into this comment about here, SPU, after having an equally big down day the prior day, had kind of stayed within the bottom half of the prior day's double distribution, had tested down once and then tested down again and had failed and just started to move higher. But what I want to take from this is really, it had cleaned up the low that was left yesterday, the prior day. It had double bottomed, and really just broadly at this point, it kind of looked like it was ready to go up anyway. Not to say that I was looking to get long, But really it just adds into this kind of, the risk on theme was amplified as the structure of the main markets involved on this US-China Trump stuff were primed and ready to take that move anyway. But you can also see, with reference to what I was saying before about Trump often wanting to pump the markets up when they've had a bit of a down move, on the daily here, which is this left-hand box, you can see that after breaking out of this big kind of sideways zone between sort of 28.15s and 29.44s, the market had broken out, failed to make all-time highs, and it just sort of rolled over and just started to show a little bit of weakness off the back of some of this impeachment rhetoric. And really, it just put Trump in the prime position to try to pump this market up, because really when we get back down to the top level of this big sideways range, there's going to be a question asked of the market as to whether we're going to roll back inside here or whether we're going to bounce and go and take all-time highs. Now, we can all have our opinions on what that's going to do. We won't know until it happens, but you could bet that Trump has his own ideas with the fact that he's pretty much hinged his success to the performance of the stock market, that he really wants to make sure that it doesn't offer down through that level. And he's so visible on it. Prior to this comment, he'd already been talking about the stock market. He's made comments to the effect of, oh, if I was impeached, the market would go to pot, and all the rest of it. So really, it's so at the forefront of his mind, just again to pay attention to the day after any big down days that we might have in the S&P, just pay attention to when Trump's tweets start picking up, as there might be some sort of, very aggressive tone to his tweets or comments that's made. So just having a look quickly at where we're going to kind of pick up the ladders when I have a look at a recording here. We're not going to really be talking so much about my execution, because I was pretty inactive off the back of the fact that the move and relative to the comment didn't make sense in my eyes. So it's a bit of a missed opportunity for me. I was actually trying to fade the move in the Bunds from around here. And then after we offered down and it just showed this real splashy price action down here, real distinct price action, and we pulled back, just going to have a look at the price action that occurred in this sort of area, because really you can get very caught up when you get these big moves off kind of null comments, that you can constantly try to fade them and you can over fade them in the wrong areas. And if it gives you a hint that the market just wants to offer with, again, some real distinct price action by the way of real big clips coming to market in this kind of pullback zone and offering down like 5 or 6 ticks, that's not what you want to see. You want to see a kind of pullback, attempts to move the market lower, but no real kind of big clips coming in, if you're going to see the full reversal back up into the kind of really balanced value area that had been formed throughout the earlier part of the day. But these are 1-minute charts, by the way, but you can also see we're going to pick up with the SPU. It had also just been kind of looked like it had made a bottom and was quite a structured move upwards. But also want to talk about when you have these moves, although they might not retrace immediately, the next day there's potentially room for the market, after it's digested the information, realise that nothing was really in it, to kind of come back. So I'm going to jump to the ladders now. And we can see here, so this is the comment. It wasn't the time that the comment came out, but this is how it was kind of shown or announced over various news wires. Trump says a trade deal with China could happen sooner than you think. Now, there's nothing firm to this whatsoever. And really, it's one of those ones, natural reaction would be, we've heard this 100 times before. Like, what does it really matter? It doesn't really mean anything. But perhaps thinking about it now, not only given the structure looked in the Bunds potentially good to roll over, but also the rhetoric on the back of the potential impeachment, that there's been talks that if Trump was to be impeached, this would be bad for the trade deal. Now, I don't know if that's potentially true, but in any way, You could overread this to see for a reason why the market should get some relief, some risk on off the back of it, but equally you could argue that it could be completely bogus. In that situation, you've really just got to rely on the price action, which we're going to look at now. So I want you to pay attention to primarily the Bund and then gold, which should be correlated positively with the Bund. So we're going to see gold and the Bund move lower, and S&P, which is this ladder here, move higher. But what I want you to see as we start to watch this in real time is that the Bund and gold, this is before the comment really started getting traction. Just note this is the real tight value area that Bund had been in. Just starts offering over and moving down, and note gold moving down at the same time. We've also got T-notes here, which were kind of starting to hold an offer. But the S&P, no, it hadn't really done much at this time. So the Bund's failing to kind of pull back, starting to see gold approach its lows as well. And really S&P just kind of, hovering around this 65, 66s area. But we're going to see like a distinct move when this really starts to hit the wires, and it just kind of coincides with a good breakout of the range in the Bunds as well. So I think it's about to hit the wires in the next 10 seconds or so. You'll observe that I wasn't really paying too much attention to it at all as it did come out. If anything, my initial reaction is to fade an extension of the range in the Bunds, but not really paying attention to the fact that it's probably getting more traction across the T-notes, gold and the Bunds than you'd like to see if you're going to fade this type of move. What you want to see is a fast move and then a real die down in velocity or the amount of kind of orders that are going through the book before you start fading it. So Bund hasn't really been able to uptick, or kind of trade the offer of the price above. SPU's still pretty much just in line with where it was before. We're going to watch about 5 minutes, 10 minutes of footage here if I can, maybe fast forward after the market starts to pull back. But really pay attention to, as everything starts to break its extremes at the same time, it was showing some kind of distinct characteristics of quite an aggressive move. You can see the SPU's starting to go now. Both Bund, gold and T-notes all break their lows at the same time. S&P starts to bid, and then gold and Bund both offering quite hard. So as my attention is drawn to the fact that, okay, this is off the back of pretty much a bogus Trump comment about getting closer to a deal potentially, nothing really firm in there. I think I kind of wake up a little bit and think, right, as gold starts to bounce and SPU just starts to pull back a bit, maybe it's a chance just to get a quick clip in the Bund. Just get a quick clip in the Bund, and then potentially we'll see a move back towards mid-range that I'll be able to kind of build upon, targeting just a move back into the daily value area. You can see gold's bounced quite hard, Bund's 5 ticks off the lows. And really my thinking at this point, I wouldn't say that it's necessarily out of line, but it's how you then interpret the secondary reaction that you get to kind of understand very quickly that you're wrong, and not only that you're wrong, that you could actually potentially cut and reverse your position and take advantage of the continuation. You can see immediately offside, SPU kind of grinding high but not doing much, but gold's looking like it's approaching the lows again. T-notes looking like it's approaching the lows again. So really being quite prudent as not trying to pick a bottom, especially when this US-China stuff can be largely unpredictable, and just getting out of the trade. But as the market starts to offer now, this is the kind of key, we just traded 600 lots into the low. This is a key opportunity now to really take advantage of getting something in on the short side when you're starting to see all your ladders heat up, gold's making another pass at the low, it's just starting to see some bigger clips come through in the Bund, and really it's just a bit of an unusual reaction. Gold's starting to offer quite hard now. S&P not really done a whole lot, which is usually the main kind of proxy market that I'd use to trade the Bund off of. But really you can see now the market just starts to open up. We've traded from about 44s, already down 20 ticks, and then these big clips just start coming in at market. There's a 10 tick splash even lower. And now I want to pay attention to the reaction here, because we've just traded 7s, which I think is the low of the move. And then everything starts to bounce. Now, if you're going to fade this move, you want to see like a big, strong emptying out. And then if you kind of want to see multiple flushes to the downside. And now we've just seen 2,000 lots traded at 8s. It's the first time we've seen a kind of volume node up since 23s. And really, if you want to fade this move for a fast smash and grab, now's the time to be getting in. What I do quite badly is I wait for too much confirmation, as I haven't really understood the move, before I start working an entry, looking for a move back into value around this kind of 30 to 35s area. And it's just quite dangerous given what we're going to see on the ladder now. But first and foremost, just a little kind of pattern that you can observe when you do see one of these fast reversals. I think we held up just above a daily low as well, which come in around double O's or something like that. But you can see as everything starts to bounce now. T-notes are kind of 3 or 4 fat ticks off the low. Bund's bounced 20 ticks or so. You know, gold's bounced 25, 30 ticks or so. And really, now's your last time that if you want to start fading and buying this, that you should start doing it, because by the time you've got 30 ticks away from the low, you just open yourself up to too much risk in what's kind of a pretty dangerous area, unless you see just like a complete bidding over. You don't really want to see any two-way trade as this market starts to retrace. If your thinking is that the comment is completely bogus, the complete overreaction, then the market should digest that quite quickly. If the market has to question it again, then chances are you're probably wrong. And that's what I want to pay attention to here. When I start trying to work a bid, there's just a couple of kind of really big clips that come in at market, selling at market, that kind of give you the indication that this move is not necessarily going to be as easy to the upside as you would potentially expect. And also just noting that S&P is still towards the high of its move, which is around 76s. It hasn't really rolled over that much at all. And really you'd want to see the S&P coming back towards, you know, 66s, which I think is where it started. You're starting to see gold come back a bit, but really just too much churn in this area so far to really kind of give you an indication that the Bund is going to retrace all the way back up into the 44s, 45s area. I'm just going to fast forward this a little bit. So I'll just skip through, and essentially we've just rotated up. You can see we've put in a bit of volume in the Bund between kind of 90s and 28s. We've got this last high volume node at 33s before this kind of area that we initially broke down from. And I'm starting to work a bid from here, willing to kind of work in this area, but really the price action that we're going to see is it should kind of send just a couple of warning signals. So we see now, so the market's bounced, and just there was kind of like 500, oh sorry, maybe more like 1,000 lots or so, which was executed at market, pushed the market down sort of 3 to 5 ticks. And really that's not the sort of price action that you want to see if you're trying to kind of build a long position into the pullback, expecting a move back into the 42s. And I know it's quite a small, subtle thing, but really that was enough for me to kind of take my medicine. I think I end up scratching this pretty much as it rotates up higher. I think I tried to average myself out of this position because I'm still at this point thinking that, you know, the market should trade up towards this sort of 33s, 34s area, but really it's the wrong trade to take. And I'm quite good at, you know, when I have averaged into the position and I start to go on side, I work myself out quite quickly and don't really get too carried away. Just started to recognize the fact that, the price action that I'd seen. And just again there, another 500 lots hit at market, I think 27s, 28s, which is a similar sort of price as where we saw it before. And I think I worked this out for pretty much a scratch, which was probably the best thing that I did throughout the whole move, seeing as that I completely missed the down move, but not getting too caught up in the long when it's just not showing you what you want to see. But what the market actually does after that, after this, and if I fast forward it for you, we can kind of see, I'm going to play this at 4 times the speed now, it very kind of slowly starts to grind back lower and lower and lower and actually makes a new low of the day. So what this was, in my opinion now, looking back on this in hindsight, it was a good opportunity to kind of digest the information that you'd seen. Yeah, I made a little bit off the long, but really the fact that we couldn't get up above these 35s area, it was a good opportunity to start working a short, looking for another test of the low. Because when you have these big steep pullbacks, you've effectively got 2 decisions. Is it going to pull back and then retrace the entire move? Or is it going to pull back and then roll over and have another kind of go at the low? Now, if you were hinging this purely on the comment, you'd say that it should retrace the move. But given the kind of, the real kind of aggressiveness of that initial offer, and then also some of the price action that we saw in this sort of 28 to 30s area, it's just enough to kind of put some warning signals in your mind that this isn't the one to get so attached to the long and the full retracement.